the beat on the bottom line was really driven by one-time things. So if you take that out, they actually had lower margins than we were looking for. And it's exactly right. They had 26% properties revenue growth this quarter. That accelerated for the third or fourth straight quarter in a row. So really great, revenue results. But all that revenue growth is coming from lower margin sources. One of the biggest drivers is YouTube. The margins that they earn on YouTube are a lot lower than on core Google search, and also mobile search has lower margins than desktop search, and that's obviously growing a lot faster. And so what we see, we downgraded the stock last June and just expected it to underperform the rest of the FANG complex, but outperform the market. And that's really what we've seen playing out. It's a good stock relative to, some of the other stocks in tech or in the broader market, but relative to some of your other choices in the internet sector, we think it's...
You said relative to your other choices. What's your basket of choices?
Well, we really compare Alphabet to Facebook, Netflix, and Amazon. Sort of mega cap, tech and internet bellwethers.
And you take the other three before you take Google or Alphabet in this case?
I would. Yeah.
You would.
I think in the other stocks you have a lot more visible and reliable growth, and in many cases much more reasonable valuation.
Even Facebook, you think that?
I do. I mean, Facebook's got some issues on the data front, and they've got to work through those. But Google has some of those same issues as well. I do actually think Facebook and Google, when the compliance imperative becomes a lot greater for some of these data initiatives and the EU, enforcing more privacy, those companies are going to be able to weather that storm better because they've got more resources.
And you don't think there's an argument though that Google's already prepared for it, meaning that Google's actually put in a lot of the stuff?
I think they have,
in advance of all of this in a way that maybe even Facebook has not yet.
I think Google's probably a little bit ahead. The CEO on the earnings call last night said that they've been preparing for GDPR in Europe for quite some time. Yeah. Facebook likely has as well. I mean, these companies are pretty well resourced and do a good job.
Mr. Wonderful, what do you do?
A couple of years ago, when we learned that the structure of Google was going to be split into alphabets, give us more transparency on other costs. There's still a dual voting class share issue for institutional investors that are starting to move away from that. The stock has underperformed ever since that announcement. Is it because we now realize many of the cash investments never pan out in this model? Is that really what's going on here? Because there's so many things the company does that you hear about, glasses and, VR stuff, and it's all cash burn, and then we never talk about it again.
I mean, the company has done a good job of starting to be more disciplined on cost related to those other bets. I think,
Well, not really. Those margins are down net.
Yeah, but the overall expenditure in terms of dollars is pretty low, and the other bets revenue I think was $150 million or something in this quarter relative to tens and tens of billions of dollars in the rest of the business. So it's become small relative to the core business. You're right that those other bets are losing money, but the magnitude of those is smaller. I agree with you. I think the reason why Google's stock is sort of flatlined here more recently is because they're doing a great job growing revenue, but core desktop search, which was the business that Google started with, was probably one of the best business models ever invented, and it's just got insanely high margins, and everything else they're getting into is lower margin.
Can I flip the restructuring argument around on you, which is, it's fascinating that once there was transparency around what Alphabet was doing, it's actually underperformed. I wonder, when you look at Amazon, if Amazon was actually as transparent as Google, effectively, whether you'd like it more or whether you'd like it less, which is to say that I think there's some kind of sort of mystery special sauce premium that's been applied to Amazon, in part because we think that there's stuff in there that could, shoot the moon kind of stuff. And by the way, there might be shoot the moon stuff in Google, but we're now a little bit more worried about it because we're seeing the cash burn.
Transparency for the sake of transparency doesn't always work, because now you've exposed how the sausage is being made, and it's ugly and it's complicated and sometimes nonsensical. And that's what you did to yourself when you made, Alphabet out of Google. In the old days, it was, they had earnings, margins are pretty good, and it's growing. You didn't think about the sausage being made. Now, every day it's on the plate, and it's ugly. And I think this is going to dog the stock for a long time. Where are you at on this dual voting class thing? Because I'm not a fan of this.
Well, Google is not super shareholder friendly in general. They don't give a lot of cash back to shareholders, and of course you have, this dual voting structure, which is really, not shareholder friendly. But Facebook has something similar, and you know, a lot of these big tech companies do. I would just go back and say one thing. I think part of the reason Amazon's way outperformed Google is because Amazon has much broader growth prospects. You know,
right.
E-commerce is only a small portion of retail globally. Digital ads, search ads, is a big portion of the ad market because they've been at it longer, and Google and Facebook have done a much, you know, better job of comprehensively gobbling that market up. There's still a lot more room, you know, to grow for the e-commerce side.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.